We've obviously got what the locals you would look at as a top edge here, pretty obvious. And we've obviously got a bottom edge here, pretty obvious. This is a balance area. Chop, fair value. And if it's a fair value, the dealers, they bid the lows. They bid from fair value to the bottom edge. They bid from fair value to offer from fair value to the top edge. They get bigger, 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 and bigger. Bigger, 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 and biggest at the bottom edges. Now, what happens when the market moves value? When the market moves value, the dealers, the locals, simply look at the price there and go 95.50s, 96.80s, 130 points, and they start making a projection for 130 points. They go, okay, if we're going to move fair value, the dealers won't come in for about 130 points. So if the dealers won't come in for about 130 points, we know that the dealers will start looking around about this area here for a buy opportunity. Why? Because the sellers will buy there, the dealers will buy there, everybody's going to start buying there. So what happens? The price trades down to that area, and the price buys from that area. Yes? Is that not the most obvious thing you've ever seen in your life? Is that not the most obvious thing, guys? Seriously, I mean, you can't make it up. People wonder why we draw these things and we're able to call the buy trade reversal before it even happens. And then when you look at something as simple as this structure, you now know why we're able to buy at these areas before it happens, because we're already starting to put our orders in line with the dealer's buying, in line with the seller's profit taking. That's how easy it is to be a millionaire trader, right there. Right there. When you look at it, you go, wait a second, so you bought the 94s, it's just traded 94.90s, you've just picked up $900 a contract, potentially on what, 500 contracts, 400 contracts, 100 contracts? Possibly just a single contract, possibly 5 contracts. 4.5 grand in under 10 minutes for a small retail trader on oil using the stuff we taught you in yesterday's classroom. We called it before it happened, guys. We told you that the buy level was there. We told you where the trade was going to be. I'm assuming you all showed up and you bought along with us. I'm sure you did, because obviously you're just bad at trading if you didn't. Because you know where this area is located. It was in yesterday's classroom. And it wasn't just about this area either, was it? When we go across to the left-hand side, we can see it was also a breakout of this big cash rejection here that we had talked about in last night's tweets. We had this, what looks like a unfair bottom edge, an excess bottom edge. An excess bottom edge. And obviously at an excess bottom edge, you're automatically thinking, well, there was a real money buyer that came in here. Why? Because they bought at fair value at higher prices for that rally. So this was an excess print. Now, obviously, the profile guys have got a very specific way of talking about excess, but they talk about it as a they talk about it as a single candle print. A single print on a 30-minute chart is excess to those guys. But, you know, come on. I mean, it is what it is. It is what it is. It doesn't matter really in that sense. It's a fast money rejection of something is an excess. You know, so when you see a fast money rejection, it creates an excess, and it's probably going to be a buy at the same price, you know, when it returns. Now, obviously, a lot of stuff's happened during that period. But if you think about the excess low price here, if I've got an excess low, I know where it's going to go to. Because we do exactly the same thing from what we did in classroom yesterday. If I know that there's an excess low there, I know it's going to go to this price here. And I'm already aware of the fact that I'm starting to add in my offers into that price area. I mean, think about it. It's just about drawing in some balance areas, drawing in your last L1s and doing it as a process, isn't it? Pretty simple stuff, isn't it? Pretty simple stuff. Well, we don't, Everett. We don't know what's going to drop out the bottom, except for the fact that the sellers came in below the fair value price. Remember, if sellers ever come in below fair value, that gives us a massive clue about the price dropping through the bottom. So when we see the sellers coming in below fair value, which is this price, so you can see the sell reversal here, the sell reversal there on that bracket, so you can already see those sellers coming in there. The higher probability is we're going to drop through the bottom edges of that bracket and move to the bottom edge of this one. You know, it's always about that top right-hand hold or bottom right-hand hold, and that is what we call a bottom right-hand hold right there. Sellers coming in at bottom bracket areas. So when we see those sellers coming in at bottom bracket areas, that's obviously a massive clue for us to get ready to do business in that location, isn't it? And obviously when we get through that bracket there, we obviously now have a bottom of a bracket, we've got a high of a bracket, we've got a measure of a bracket, we know exactly where we're going to and where we're going from. And when we look at this as a story, we obviously start doing the next phase. What's the next phase? Well, we do the next bracket high, the next bracket low, we know where it's going to go to next as a phase. So on the basis that this is an excess low with a fast money reversal, the previous high brackets were in here. You can already recognize the previous high bracket was there. You already know exactly where this price is going to go to, don't you? You already know that it's going to go to this price area here. And it actually came up a little bit shy of that price area because of that toxic order flow, no doubt in the background. There was still a seller in place here. So you're already aware of that toxic order flow there. And obviously it got to that and the seller just came back in again from that toxic level and sold back into that sell price. So now we're expecting this to bracket round a little bit in this area. Well, they make so much money during that period that the dealers are starting to rotate out of their positions here to go basically neutral or try and get short inventory. So the dealers are going to try and get short inventory in this area here if they can. It's difficult because there's sellers coming in. To get short inventory, they need to try and hold the price in this area. And that's why we get bottom right-hand holds. Because they're trying to now get short inventory for that break lower, if that's what they believe was going to happen. So if they can't, it's just a write-off against the next balance area. You know, they'll stop buying it. They'll stop buying it, of course, and they'll let the price pop. And when the price pops, especially in a big pop like this, they'll start buying off the bottom edges, selling on the upticks, and they'll go back into the new rotation. And they'll make more in this area here than they lose on that drop, for sure. You know, they'll make a lot more in this, but they will be losing money usually if the market breaks out of a balance. They will lose money on the last part of the trade, but you can guarantee the market makers have made a fortune during this period. The loss they're suffering on that trade is next to nothing. Because their trade, remember, is to buy this candle, buy this candle, buy this candle, sell above the fair value, buy below the fair value, sell above the fair value, buy below fair value, sell above, buy below, sell above, buy below. They've made lots and lots and lots of money in that phase. And these ranges aren't small, by the way, so these are massive profits for the market makers. So when it drops like this, they make a small loss, and they just write that loss against their profits. They're making huge profits today because it has been more rotational than it's been for a while, so they're able to make a lot of money during this phase. Yeah. How's my S&P buy doing, guys? Anybody still on board? Anybody still making a lot of money off my hard work? It's only went 86s to 18s, of course, which is pretty good. So it's turned out to be a lot better. $1,500 profit. Anybody? Anybody? Surely everybody, right? Surely everybody. Don't call me Shirley. Tweeted in advance, executed on the right-hand edge, I-sided transaction, massive profits, $1,500. We gave you $1,000 earlier on the first max trade and a $1,500 trade there. And if I was you, I'd be booking some money on the volume that's starting to come in into this 20 level.